Yes, we've added Senex Energy to our high conviction list this month. Senex has been a stock that has been one of our most preferred exposures in the energy space, especially in the small to mid cap end of the sector for some time. But we really see now as a great opportunity to really increase our conviction in that buy call. Really, what we're basing that on is a combination of top down and bottom up factors that we really see supporting this story at the moment. Really, first starting off with the bottom up, looking at the value that the business is going to start to unlock, and really stripping back that valuation we have in the stock to see what the market's trying to imply or price in at the moment. Really, just starting off with each piece of what we see being priced in. You've obviously got Senex's current cash balance, so that's 135 million with no debt, which is equivalent to about 12 cents per share. If you then count just a scrap value for their existing oil and gas production in the Cooper Basin, which are certainly established operations, so to give that just a flat 9 cents per share on a flat oil price. We're already at 21 cents per share. Then they've got two, and they're really what are becoming their two flagship operations in the Surat Basin, are both gas projects. And really the newest of those being Project Atlas, which they've just picked up through a government tender. Again, just applying a pure $1 in the ground per petajoule to that 200 petajoule reserve in the ground on a P50 confidence, and then risking that back 50% to be quite conservative, you come up with another 10 cents. So with that, we're already around that 31 cents per share in valuation, with that while ignoring their second project, gas project in the Western Surat gas. So looking at that 31 cents, comparing it to the current share price of 35 cents, it really implies that the market's giving just 4 cents of value to that second gas project, which we actually quite like. So looking at that gas project, the Western Surat gas project, Senex have been in their phase 2 drilling now, and that drilling completed a couple of months ago. That was a 30-well program, and we're getting quite excited because we're really coming up to when we're going to see initial production results from that phase 2. So that we're expecting that to be in their January update on the December quarter, on their operational quarterly result. So it gives us an initial look through. So just given how conservative the market is in just giving 4 cents of value essentially to that project, we see a real opportunity for it to outpace and maybe give a positive surprise. So we meanwhile value that project at 3 times what the market is, and really on an unrisked basis, it could be considerably higher again. So at this early stage, with the 9 blocks within the Western Surat gas project, 3 of them being really high confidence for us, another 3 being sort of borderline appraisal exploration, and then the final 3 blocks being really pure exploration. That there's a huge variability in results that can come out of this drilling, but obviously we're getting quite excited given the market's quite conservative. Then separately, if you look at Senex from a top down and where the market really is in terms of sector rotation, strength in the East Coast gas story, which is really hitting fever pitch now, as well as just the oil price environment, which is also firming. We see all of those things lining up to really support the sector, and especially Senex. So in terms of the East Coast gas market, at the moment the deficit supply has been really kept to quite a manageable level, and really what we attribute a lot of that to has been very low Asian LNG prices for gas, as well as just a generally low, up until now, oil price, which has really taken pressure off some of the big East Coast LNG producers with their offtake partners, who are also their joint venture partners in the LNG projects, in terms of how binding the offtake has been. And there has been some quite forgiving partners who have allowed the likes of Santos to sell more gas domestically to help ease the threat of export restrictions. But if the LNG price and the oil price rise, which both are doing at the moment, it does start to put pressure on that offtake to find its way back to where the binding offtake is, and we see real upward pressure and risk around that gas deficit on the East Coast. So that could really get much worse before it gets any better. And we really expect that will make development-ready projects like the 2 that Senex have really start to look quite appetizing to the market, if not even adding some corporate appeal. So Senex is a high conviction buy for us. We do have a target of 48 cents per share. and very happy with how the company is tracking.